Hello friends, this is Kamal Garg, Chartered Accountant, a fellow member of ICAI. So today we will be discussing about certain amendments which have taken place in advanced auditing and professional ethics for the purpose of May 2017 CA final examinations. Let me recall you, the last lecture which we recorded was in August 2016. Now, in addition to the lecture which was recorded in August 2016, whatever I would be covering today is nothing but the additional part of your advanced auditing syllabus. Certain changes, certain amendments have taken place since August 2016. I am listing down these amendments. You can take a copy of this one and then we'll discuss all these amendments one by one. So whatever amendments and changes are there, I am listing on the screen. These are. So the topic is amendments and changes CA final auditing paper for May 2017 examinations. So whatever amendments are there, whatever changes are there in advanced auditing and professional ethics for the purpose of May 2017 CA final examination, we will discuss all these amendments one by one. Let me point out these amendments. So amendment number 1, this is about section number 130 and section number 131. Number second amendment is about SA 610. Number third amendment is about SAE 3420. Number 4 amendment is about your code of ethics. Number 5th amendment is about consolidation. This amendment you need to do from your paper of financial reporting, because amendment is not that much crucial for the purpose of your advanced auditing examination. So let us discuss these amendments one by one. Amendment number 1 is about section 130 and 131 of Companies Act 2013. So first of all, our topic is discussion on section 130 and section 131 of Companies Act 2013. Now what does this section says all about? So you can give this topic in your notebook. The heading is reopening and revision of financial statements, etc. Now what does this topic state? The topic says that if reopening or revision of financial statements, director's report, etc. is required, then what can be various circumstances? Two kinds of circumstances can be there: compulsory revision and voluntary revision of financial statements, etc. So let us discuss these circumstances one by one. Now just see. First of all, we will discuss section 130. Section 130 of Companies Act 2013 deals with reopening of financial statements. Reopening of financial statements. Section 130 states that if on an application being filed by central government or by income tax authorities or by SEBI or by any other statutory regulatory body or any person concerned, then on such an application, if NCLT or court of competent jurisdiction is satisfied about the content of their application, then the court or NCLT, as the case may be, may order that the accounts, that is your financial statements consisting of P&L account, balance sheet, cash flow statement, etc., can be reopened for the purpose of consequent revision. Now what we need to understand, step number one. Step number one is the sanctioning authority. The sanctioning authority for reopening of financial statements is nothing but either the court of competent jurisdiction or the National Company Law Tribunal. Whereas the applicants can be central government, the applicants can be income tax department people, or the applicants can be any officer authorized from SEBI or SEBI itself. Now the point of critical situation is point number 4, whereby they say the application for the purpose of reopening of financial statements, etc., can be filed even by any other statutory or regulatory body or any person concerned. Now question arises, what is the understanding about any other statutory or regulatory body or any person concerned? But we need to understand this expression, any other statutory or regulatory body or any person concerned, is not defined in section number 130 of Companies Act. But yes, we have to understand with the help of certain examples. To take one instance, this any other statutory or regulatory body can be Reserve Bank of India in case of banking companies, can be IRDA in case of insurance companies, can be CBI, Central Bureau of Investigation in case of certain companies, like we have examples of Kingfisher Airlines Limited and so on. Now further they have written or any person concerned. This word person again is not defined per se in section number 130. For that purpose I can say the expression any person concerned may even include shareholders or stakeholders of the company. So what we can understand is, under section 130, the application for reopening of financial statements can be filed either by central government or by SEBI or by income tax authority or by any other regulatory forum, for example RBI, for example CBI, for example IRDA, etc., or any other stakeholder of the company. But yes, the court of competent jurisdiction or NCLT, as the case may be, may order for reopening of financial statements only when it is being established, that the relevant earlier accounts, the word relevant here signifies the financial statements which are considered for the purpose of revision. If it is being established before the court of competent jurisdiction or NCLT that relevant earlier accounts were prepared in fraudulent manner, or the affairs of the company were mismanaged during the relevant period, casting a doubt on the reliability of financial statements, then only court of competent jurisdiction or NCLT may order the reopening of financial statements, etc., under section 130 of Companies Act 2013. If the court or NCLT, as the case may be, have ordered for reopening of such financial statements, then company will need to reopen its books of accounts and recast its financial statements. So simple thing is, section 130 can always be stated like, section 130 deals with compulsory reopening and revision of financial statements. Section 130 would be invoked for the purpose of reopening and revision only when certain applicants have filed the application before court or NCLT regarding revision of such financial statements. These certain applicants can be central government, SEBI, income tax authorities, any other regulatory forum, or any person concerned. Example I already gave you. Any person concerned may include stakeholders, for example debtors, creditors, shareholders, etc. Any other regulatory forum may include CBI, RBI, IRDA, etc. But yes, one thing is critical and crucial. The critical and crucial point is the court or NCLT may order such revision, and they will order only if they are being convinced, they are being proved that the concerned financial statements which are being under consideration for reopening and revision were prepared in a fraudulent manner, or were prepared in a manner that was casting a doubt on the faithfulness or the reliability of such financial statements. So always remember, section 130 deals with nothing but compulsory reopening and revision of financial statements. Now question arises, if we do have one agenda under section 130 for compulsory revision of financial statements, then question arises whether we have to have only revision part of financial statements. Meaning thereby, suppose that NCLT ordered that ABC Limited is required to revise its financial statements. Now question for the house is, if I am going to revise my financial statements because of the order given by the court or NCLT, don't you think that because financial statements are revised, the concerned auditor's report should also be revised? Answer is yes. Meaning thereby, if by virtue of section 130, the financial statements are going to be reopened and revised, then mandatorily there is no other option but to revise the consequent audit reports as well. Now this section 130 was about nothing but compulsory reopening and revision of financial statements. Now let me come to the second part. The second part is about voluntary revision or reopening of financial statements, etc. Section 131 says that, see the screen, section 131. Section 131 says that voluntary revision of financial statements or board report may be required, when certain circumstances are present. So let us see one by one. Section 131 will be applicable when financial statements or board report, as the case may be, are prepared and presented in a manner which is not complying with the relevant provisions of the Companies Act. What does it mean? The financial statements are prepared as per the provisions contained in section number 129 and section number 133 of Companies Act. I repeat, the financial statements are prepared in accordance with section 129 and 133 of Companies Act 2013, whereas the board report, or people do say director's report, the director's report is prepared as per section number 134 of Companies Act. So situation is like that. The management people know the financial statements are prepared, but they were not complying with the requirements of section 129 and 133 of Companies Act. Or in the second case, the board of directors report was not prepared in accordance with section number 134 of Companies Act 2013. Then what they can do? In such a situation, they can file their application in form NCLT1. They can file their application in form NCLT1 before NCLT for the purpose of obtaining permission for voluntary revision of financial statements and board reports, as the case may be. But you need to remember, here the authorities or other stakeholders are not making it compulsory that company need to revise financial statements. Rather, we are taking a voluntary action to admit our mistake and revise the financial statements. So if we are filing an application for voluntary revision, we have to file by filing form number NCLT1 along with form NCLT2. Such application shall be accompanied with prescribed documents, and these two forms along with prescribed documents shall be filed before NCLT. When this application will be filed before NCLT, we have to prove that the financial statements and the board report, these were prepared but these were not complying with the requirements of Section 129 of Companies Act, Section 133 of Companies Act, and Section 134 of Companies Act. If it is being so established, then there is a critical element. The critical element is Section 131 says that if you wish to revise voluntarily financial statements or director's report, then the company may revise financial statements or board report as the case may be in respect of any of the 3 preceding financial years. So you can revise any of the financial statements of the preceding 3 financial years, and a company will not revise its financial statements or board's report more than once in a year. So in 1 year, you cannot have multiple revisions. So if in year 16-17 you have made a revision of financial statement, then you cannot revise again if any error is found after such revision. Only once the revision is permitted. Further, the revision can be made in any of the 3 preceding financial years. So you can revise only past 3 financial years and any of the 3 preceding financial years. So what you need to remember, voluntary revision is permitted, but with 2 restrictions. Restriction number 1 is only 1 revision is allowed. Restriction number 2 is you can revise only any of the preceding 3 financial years. And more importantly, the same question prevails again. If I would be revising these financial statements, then whether I am supposed to revise auditor's report also? Answer is yes. How and when, we will see later on. Now, Section 131 further states that once you are filing an application to NCLT for the purpose of obtaining permission for voluntary revision, then what do you have to do? Section 131 says that NCLT shall give a notice to central government and income tax authorities and shall take into consideration the representations, if any, made by that government or authorities before passing any order. That means, if you are NCLT and I am the management, I will file an application before you, but before you will give me any permission, you will approach central government or income tax department and you will ask them that company Kamal Private Limited has come to us for the purpose of voluntary revision. Are you having any objection if we permit the revision? If the income tax department of the central government says yes, we do have the objection, then before giving the permission, the NCLT need to consider their objection for the purpose of giving or rejecting my proposal of revising the financial statements. Further, Section 131 additionally states, detailed reasons for revision of such financial statements or report shall also be disclosed in the financial statements and report respectively. That means, what are the reasons for revision of financial statements must be disclosed in notes to accounts, and what are the reasons for revision of director's report must be disclosed in the director's report itself. Further, if the copies of financial statements or report means director's report, have been sent to the members, delivered to registrar means registrar of companies, or they have been laid before the general meeting, revisions must be restricted. That means revisions are confined, they are limited to the corrections arising from non-compliances stated in Section 129 or 134 of the Companies Act respectively in this section number 131. So point number 3 is a kind of repetition. Basically the point is again the same point. You can revise only that much of aspect which is connected with contravention of Section 129 read with Section 133 or contravention of Section number 134. So let me repeat once again. Under Section number 131, voluntary revision is allowed subject to 2 restrictions. Restriction number 1, only 1 revision is allowed, multiple revisions are not allowed. And number 2nd restriction is you can revise any of the preceding 3 financial years. These are 2 restrictions. Additional coverage points are NCLT before giving permission for revision will take any representations, objections, feedback from central government or income tax authorities as the case may be. And lastly, Whenever you revise these financial statements, the revision must be confined, must be limited to the errors that have taken place on account of contravention of section 129 and 134 of Companies Act respectively. Lastly, the law states, once you have revised, you have to follow this additional procedure. Procedure is, the previous financial statements or report may be replaced by revised financial statements or revised report of the board. That means whatever was issued should be replaced with the revised statement or revised report, and they must be supplemented with number 1, a summarized statement of revisions, and number 2, copy of order of NCLT, and number 3, revised auditor's report on revised financial statements. More importantly, extremely important point, there is a mandatory requirement that the company shall affix the word revised in prominent manner. That is, it shall be ensured that the word revised is prefixed prominently on all the documents forming part of the revised financial statements or revised board report. So I will call my audit report as revised audit report. I will call my statement of profit and loss account as revised statement of profit and loss account. I will call my balance sheet as revised balance sheet. I will call my cash flow statement as revised cash flow statements, etc. So this is the first amendment about section 130 and 131 of Companies Act 2013. So let me move to the next amendment. The next amendment is about Code of Ethics. So let us discuss Code of Ethics first of all. Now see, certain clarifications have been issued by Ethical Standards Board of Institute of Chartered Accountants of India. Now in your chapter of professional ethics, which is chapter number 22 of your study material, certain changes you need to address. Now the changes are being announced by Ethical Standards Board of ICAI. Let me highlight it. These are the changes area which we need to cover one by one. So Ethical Standard Board of ESB of ICAI, certain changes have been announced. Change number 1. Change number 1 is, a member cannot be appointed as a statutory and oblique or tax auditor of such a company for a period of 2 years from the date of his resignation or removal as a director from such company. What does it mean? Suppose that, let us take an example. Suppose that in ABC Limited, Mr. X, a chartered accountant, was employed as CFO. He resigned from his job of CFO and obtained certificate of practice from ICAI. He started his practice. Now question arises, if Mr. X, the CFO of ABC Limited, resigns from ABC Limited and obtains COP from ICAI, then can he be appointed as a statutory auditor or tax auditor of ABC Limited? Answer is no. Ethical Standard Board is of the opinion and hence has given a clarification that if you have resigned from the job of a company, then for a period of 2 years from that date of resignation, you cannot be appointed as a statutory auditor or tax auditor, as the case may be, of such very company in which you were earlier working as an employee. If within these 2 years you are appointed as statutory auditor or tax auditor, then it shall be deemed as professional misconduct. But you need to remember, the restriction is only for the appointment of statutory or tax auditor. There is no restriction if the person is appointed as internal auditor, management auditor, tax consultant, etc. So for a period of 2 years, if you take position as statutory auditor or tax auditor, then it will result in professional misconduct. Otherwise there is no issue. You can be taken as internal auditor, no problem. You can be taken as management auditor, no problem. You can be taken as tax consultant, no problem. So I have highlighted the area, statutory auditor or tax auditor only are the issues. Number 2 clarification. A partnership firm or limited liability partnership firm. So first case is a partnership firm or LLP having 10 or more than 10 partners. Having 10 or more than 10 partners have to face a restriction. Have to face a restriction. And the restriction is a partnership firm or LLP having at least 10 partners. At least means 10 or more than 10 partners. Such a firm cannot be appointed as branch auditor of a company of which they are the statutory auditors. For example, if a CA firm is there, XYZ company, and XYZ company is having 10 partners. XYZ company having 10 partners is statutory auditor of ABC Limited. ABC Limited is having branches across India. Question arises whether XYZ company, chartered accountants firm having 10 partners can also be appointed as branch auditors of various branches of ABC Limited. Answer is no. If they would be appointed as branch auditors along with their statutory auditorship, it will result in professional misconduct. If I read the law again, ESB stated that a partnership firm or LLP having 10 or more than 10 partners cannot act as branch auditors of such a company of which they are the statutory auditors, but there is no restriction in examination of books of accounts and other records of those branches for the purpose of their statutory audit of the company. So what you need to remember, I can examine books of accounts of branches, but I cannot issue branch audit report for those branches. So this restriction is only when you are having a partnership firm, number one. Number second, your partnership firm is a statutory auditor of a company. Number third, your firm is having at least 10 partners. If it is so, then you cannot be appointed as branch auditor of the same company of which you are the statutory auditor. Number third point, a chartered accountant cannot exercise right of lien. A chartered accountant cannot exercise right of lien over client books and records for non-payment of his fees. This is a very serious change. Why I am saying serious change? Because earlier a right of lien was allowed, but now right of lien is not allowed. So for example, you did audit of ABC Limited and ABC Limited is not paying your audit fees. Question arises, if ABC Limited is not clearing your dues towards audit fees, what remedy you can have? Earlier, I emphasize earlier, previously, it was allowed that if a chartered accountant being an auditor is not paid his fees, he can keep the possession of the books of accounts of the client with him till the clearance of his dues. And this was known as right of lien. But now the things have changed, the rules have changed. The amended scenario says that a CN practice cannot exercise a right of lien, cannot keep the possession of his books, cannot keep the possession of client books in his premises till the time of issue of audit report. He has to give back these all documents. That means right of lien is not permissible for a CN practice. He has to give back the books of accounts and other records even if the fees is not paid. I will take some illustrations later on. Let us see a major clarification. The clarification is, a member in practice cannot hold custom broker's license under section 146 of under section 146 of Customs Act. That means, if you are a CN practice, a question arises, can you carry out additional business or occupation as a customs house agent? Answer is no. That means, if you are a CN practice, you are not allowed to obtain customs house agency license under the Customs Act. If you obtain such license, it will result in professional misconduct. Further, a chartered accountant in service, mind you, in service. A chartered accountant in service. Up till now, whatever we learned was for practitioners. Now, guideline is for service people. A chartered accountant in service may appear as tax representative before tax authorities on behalf of his employer on behalf of his employer, but not on behalf of other employees of the employer. For example, the company is ABC Limited. ABC Limited engaged its CFO, who is the chartered accountant, to go and fight a case for the company before Income Tax Appellate Tribunal. Now, question arises, can he do the same representation work for any other employee of the company? Answer is no. If he does so, it will result in professional misconduct. Further, a chartered accountant who is the statutory auditor of a bank cannot for the same financial year accept stock audit of the same branch of the bank or any of the branches of the same bank or sister concern of the bank for the same financial year. So this guideline is self-explanatory, don't require any further explanations. But yes, one thing is, this guideline is applicable to banks audit only. I read the guideline once again. A chartered accountant who is the statutory auditor of a bank cannot for the same financial year accept stock audit for this bank, no, for the branch of the bank, of the same branch of the bank or any of the branches of same bank or sister concern for the same financial year. So if you are the statutory auditor of PNB Limited, if you are the statutory auditor of Punjab National Bank Limited, then you cannot accept the stock audit of any of the branches of Punjab National Bank Limited for the same financial year. Next is a concurrent auditor of a bank X. A concurrent auditor of the bank X cannot be appointed as statutory auditor of bank Y, which is sponsored by bank X. So meaning thereby, if Punjab National Bank Limited is the promoter of Yes Bank Limited, if Punjab National Bank Limited is the promoter of Yes Bank Limited or HDFC Bank Limited, then if you are the concurrent auditor of Punjab National Bank Limited, then you cannot be appointed as statutory auditor of Yes Bank Limited or HDFC Bank Limited, as the case may be. Then a CA or a CA firm can act as internal auditor of a company and statutory auditor of its employees' PF fund. So simple guideline, it was already there, but now the clarification is on the ESB viewpoint. So we have to repeat again. A CA or a CA firm can act as internal auditor of a company and a statutory auditor of its employees' PF fund. Why I am saying so? It is important because there are two clients. One is the company client. I repeat, one is the company client, and second is company's employees PF fund. So because these are separate entities, there is no problem, because the law says you cannot become statutory auditor and internal auditor of the same company. There is no restriction if I become internal auditor of the company and statutory auditor of provident fund established by the company. So there is no kind of problem. Further, permitting the use of firm name by any person mentioning the firm as a knowledge partner or in the thank you advertisement is not permissible. This point is again a repetition. We do have clause number 7, part 1 of first schedule of Chartered Accountants Act read with clause number 6, part 1 first schedule of Chartered Accountants Act 1949 respectively for advertisement and solicitation. They also state the same point. That means as a CA firm, I cannot designate myself as a knowledge partner or I cannot say thank you in any advertisement. Lastly, a statutory auditor and tax auditor cannot be valuers. Of the unquoted shares. Which shares? Equity shares. Of the unquoted equity shares. What are unquoted equity shares? Those shares which are not listed on any stock exchange are known as unquoted equity shares, as it would create threats to independence of auditor. So if your company is a private company and I am your statutory auditor, then I cannot carry out the valuation of shares of your company. If I do, it will result in professional misconduct. So let us understand these things, these changes with certain examples. Example number 1. XYZ and company having 15 partners statutory auditors of PQR Limited. PQR Limited is having 10 branches. Let us make a small change. PQR Limited is having 5 branches. Now the question is whether XYZ and company can carry out audit of these 5 branches. Answer is no. Why so? Because ESB has given the opinion, if your firm is having at least 10 partners, then if you are having statutory audit of a company, then you cannot carry out the branch audit of the branches of the same company. So you can copy this example whereby you can demonstrate in the examination that if such kind of acceptance is there, it will result in professional misconduct. Please copy this example. Please copy. Shall I change? Okay. Now let us see the other example. Example number 2. ABC Limited gave books of accounts to Mr. X, CA, for carrying out statutory audit. Now what happened? Mr. X completed the audit, but ABC Limited did not pay his fees. Question arises, can Mr. X, CA refuse to return the books of accounts to ABC Limited? Answer is no. So earlier it was permitted, but now they have refused to follow this earlier rule. and hence it will result in professional misconduct. So right of lien cannot be exercised. This is popularly known as right of lien not available. So right of lien is now not available as per the amended scenario. Copy this one. You can give the example and you can give the heading, right of lien is not available to the CM practice. You can give this heading, no problem. Give this heading. I repeat, the heading can be right of lien not available. In examination, this question can appear also. Done? Okay. Shall I move? Okay. Let us take one more example. Example number 3. Example number 3. Let us assume the company is ABC Private Limited. It has 1 lakh shares at rupees 10 each. At rupees 10 each. So the statutory auditors are Mr. X is the statutory auditor, and number second, Mr. Y is the tax auditor. Now the question arises. Question is, can he value these shares? Answer is, further the same question is, can he value these shares? Answer is no. Answer is no. Otherwise it will result in professional misconduct. Now the question is, what is the meaning of value over here? This is known as par value, or you can say this is known as face value. And what is this value? This value is known as fair value, or you can say this can be intrinsic value. The same thing is for this value also. That means what you need to remember, if your company's shares are unlisted, then statutory auditors and tax auditors, as the case may be, they cannot be engaged for the purpose of computing the fair value or intrinsic value of your unlisted shares. If your company engages tax auditors or statutory auditors for the valuation of these unlisted shares, then what will happen? those auditors shall be deemed guilty of professional misconduct by virtue of ESB opinion. Is it clear to you? Are you getting my point? Yeah. So there is no concept of valuation of par value. The concept and the provision is about valuation of intrinsic value or fair value as the case may be. In that very guideline, the only issue is you are going to value nothing but fair value or intrinsic value of what? Those shares which are unquoted or unlisted shares. Are you getting my point? Yeah. Please copy this one. Let me do this thing correctly. This is tax auditor. Yeah. Please copy this thing. This restriction is only for unlisted shares. Yeah. Listed shares, no problem. If the shares are listed, no problem. No professional misconduct. You can copy. Shall I change? Shall I change? Okay. Example number 4. Now, see this example very carefully because this is something new. Let us take a kind of situation here. The company is XYZ Limited. Okay. It is having Mr. X CA, who is Mr. X CA, who is CFO of the company. Now, question number 1. Can Mr. X appear before ITAT to represent the case of XYZ Limited? Answer is no. Answer is no. Wrong answer. Answer is yes. What you need to remember, he can appear for the cases of the company because the company is the employer, but he cannot appear for the cases of the employees of the employer. That does mean question number 2. Can Mr. X appear before ITAT for personal case of MD of XYZ Limited? Answer is no. Here it is no. So you cannot appear for employees of the employer, but you can appear for the employer. I repeat, employer permissible, employee not permissible. Employer permissible, employee not permissible. What's the question? Outside party. If you are appearing for outside party, again not permissible because by virtue of section number 2 of Chartered Accountants Act, if you are appearing for the cases of third party, then ICAI will deem you in practice and If you are deemed to be in practice, you must have COP. COP means certificate of practice. And if you are not having COP and still you are appearing for third party, it will result in professional misconduct. So I can always say like this, I can put the situations: appearing for employer, permissible; appearing for employee of the employer, not permissible; appearing for third party, again not permissible. But you need to remember, this guideline is applicable only for CA in service, only for CA in service. So examination tip is CA in service only. CA in service only. So this guideline is not applicable to those chartered accountants who are into practice, because if they are into practice, then there is no problem. They have the mandate from ICI that they can appear in for tribunal. Are you getting my point? So these are the guidelines which we need to cover for May 2017 examination. These are some small changes, and these small changes are very much pertinent and relevant for May 17 examination. As a teacher, I do expect that this right of lien guideline is very, very crucial. So to my understanding and to my situations, I think this guideline should appear in the examination. So up till now, the amendments which we covered are nothing but amendment number 1 is, we covered section 130 and section 131. We covered ESB opinions. So these are some guidelines which you must look after for your examination purposes. These guidelines are extremely important and should be done for examination. In auditing, these are the only amendments which are relevant. Let me put one major thing. In your financial reporting paper, certain amendments are there. Number 1 is section number 124, section number 127 about dividends. And number 2 is section number 129 about consolidation. Now these amendments are there in FR paper. I would suggest to do these amendments from your FR paper, because these amendments can even be asked in your CA final advanced auditing and professional ethics examination. So these are the amendments about advanced auditing and professional ethics. Let me repeat once again. The amendments are in respect of compulsory revision of books of accounts and financial statements. The amendments are in respect of voluntary revision of books of accounts, financial statements and director's report. The amendments and changes are there in respect of certain opinions given by Ethical Standards Board of ICAI. More than that, the amendments are there in financial reporting for the purpose of dividend, including investor education and protection fund. And these guidelines should be done from FR paper, as they are common to advanced auditing and professional ethics. The 4th amendment is in respect of, the 5th amendment. The 5th amendment is in respect of consolidation of financial statements, whereby certain companies need not prepare and present consolidated financial statements. The amendments have been carried out in section number 129, read with rule 6. These guidelines must be covered from FR paper, as these are common to advanced auditing and professional ethics. So these are the amendments about advanced auditing and professional ethics. I wish you all the luck for your future endeavors and wish you all the flying colors in your examination. Should you have any queries, you can approach me on my email ID. My email ID I am putting on the screen. You can take a note of it. Should you have any queries, you are most welcome, and I would be eager to resolve your queries as soon as possible. The email ID is cacamalgarg@gmail.com. You can always put your queries on this email ID and I will respond to your queries as soon as possible. And mind you, when I say as soon as possible, that doesn't mean never possible. I will reply maximum within 24 to 48 hours. More importantly, once you cover all these amendments, always remember these amendments are in addition to these amendments which we discussed today, these amendments discussed today are in addition to the lecture recorded in August 2016. So these amendments must be done by heart, and I wish that few questions on these amendments should appear in the examination. So with these words, I wish you all the luck, keep smiling, and have a prosperous examination result ahead. Thank you very much.